Hi, guys.
Hey, Jess.
Hey,
Okay.
Jessica.
Hey.
Hello.
Hey, Jessica.
Hey, Jess.
Hey there.
Evening, Jess.
Good evening.
Come up on YouTube, right? All right.
I'm amazing. Let me just post this in a group really quickly. How's everybody weekend been?
Yes.
Great.
That's
Bless.
good. All right, y'all. So we will get done with this psychology call. Okay, not psychology call, this trading plan call. Something that was supposed to last 1 week ended up going on and on and on and on. Okay, but at the same time, I would rather it take a while and I don't shortchange you guys and give you guys everything than to try to condense it into one call and then it's really stuff and pertinent information that you guys need. All right, so something that I do want to say before we start this call though is Michael updated my entire course. Okay. Not like the information is still the same. So everybody that is in Kajabi, like you guys, nothing changes, but he created a new website to where I don't have to upload you guys automated calls in the Facebook group anymore. And then it's just going to go straight into like the course. So I'm trying to figure out how everybody who's in Kajabi is going to transfer over to that. But until like new people, you'll have like the new, I don't know what it's called, structure, of course. All of the videos are the same. All of the information's the same. So nobody's missing out on anything. But it is a new website, like a new platform that he switched everything to, that the videos are going to be hosted just so that everything could just be uploaded into that one particular thing, opposed to having to put it in every time we do a monthly call, I have to upload it to you guys' Facebook group, if that makes sense. So
are you saying it's a new portal? A new portal to go
thank
to?
you. You know,
Okay.
I'm
Yeah,
great
that's
at
what it sounds
writing.
like you're describing there.
Yeah. So a new portal. Yeah.
Okay.
So like
Okay.
that. Yeah.
Portal
Okay. So I'm
platform.
great at trading, but all of that like intricate, technical side of the logistics of the back end stuff, I just leave that to,
So no more Facebook guides.
No. Y'all will still have a Facebook group so that y'all could conversate with each other and then add
Not group, but the guides.
Oh, yeah. So I'm trying to put it all in the portal, like Terrence said, the portal, opposed to having it like, just
Okay, cool.
some over here. Yes. But anyway, for that information,
Congrats.
I'm bringing that up is because for all my YouTube people, anybody that's trying to sign up for the course, it will look different than how it previously looked. Now it looks like,
I was going to ask you to share it.
yeah, I'll just share my screen.
Yeah.
The website's still the same, but now it looks like this. So when you go on it, I mean, you can't actually access it. Everything is locked. So basically, it's you guys' exact same videos, but everything is everything's gonna be uploaded to like this. Okay, instead of the Kajabi site. All right.
It's nice.
Yeah, it looks good.
Thanks.
It's good.
Shout
Very
out to
nice.
Michael.
Shout out to Michael.
Really nice.
Hey,
Oh yeah, he did a great
he be
job.
doing everything. I'm telling y'all, he is like, listen, he's actually gonna be doing like this branding webinar. So anybody that has businesses and stuff, y'all should hop on it. Y'all know he like built Earn Your Leisure and all this stuff. Like he's like the back end person. He does not like being in the limelight. He is like super low key, but he like builds stuff. So anybody that has like businesses and want to hop on this branding call, I'll send it to you guys so that you guys can like, I don't know, he's good at integrations and everything that I'm not good at. I'll just put it like that. He's good at business. And
I signed up yesterday.
Listen, y'all, I hate business and I am not a businesswoman. I tell people that all the time. Like, Jessica is not a businesswoman. I am a trader and I just like to trade. Everything else, like business, like all of that, like other stuff that people do, is just like miss me with that. That's why I barely be on social media. Y'all know that is a chore, okay? I
Yeah.
just like to live my life with my family and my baby and my charts and go about my business. Like that is actual
right.
work for me.
The serial
Okay.
investor.
You know, yes,
Like to be off the
yes,
grid.
Yeah.
but it's important. Like it is important because like anytime somebody's gifted at something, it is your responsibility to, bless the world with your gift. But yeah, I'm not good at marketing or none of that. None of that shit. None of it. But anyways, let's go to what we came here for. Okay. We came here for. So happy Sunday again. Listen, we have done how many weeks has this been? 3 weeks? Technically, it would have been the whole month
Yeah.
of February if we did not do the Monday call with the trading plan also. So this is the last call. So sorry that it took 4 calls to get through the whole thing, but this will be the last one. All right. So previously, I don't want to go over everything we went over. So make sure you guys hop on and watch and rewatch the videos, but we talked about clear objectives, trading, execution, risk management, market analysis, market analysis, record keeping, and then today we're going to talk about contingency plan and trading schedule. Okay, so here we are, contingency plan. So we've talked about many times before that anything can happen in the market. Okay. So I put on here, you want to plan for unexpected scenarios and market volatility, ensuring that you remain adaptable. So what do I mean by that? First off, when I am breaking down charts, and we've done this many times before, where I will say, what is point A to point B? And I'm going to keep banging that in y'all's heads because it's super important. When I say, what is that next stopping point? Whether it is a zone, whether it is your TP fib level on a minor structure, whether it is a trend line, what is that next stopping point where price can reach? Okay. It's extremely important that you know that, okay, when you are getting in your trades and that when you're trading your minor structure, because again, anything can happen. So we can know the overall structure. We've talked about this even in your course on your second assignment, where we talk about we can have a 4-hour trend. Then we have all of those 1-hour trends inside of that 4-hour trend. And then we have all of those minor structure trends that make up that overall trend. That overall 4-hour trend, when somebody's just looking at a 4-hour time frame, that overall uptrend or downtrend could take literally a month to play out. So the question is, are you just going to hop in anywhere? Or are you just going to sit in drawdown? Or are you going to literally go all the way in profit in your account, go completely negative just because you see the overall structure, but you don't see what's happening on the inside? Okay. Anything can happen. So when you understand the major structure, the thing that you don't understand is you can have a lot of volatility or a lot of movements on the day-to-day basis before that overall major structure plays out. Does that make sense?
Yes.
Everybody with me?
Yes, it does.
Yes, it does.
Absolutely.
We know the things that shift the market, but a few of them here that shifted drastically. Because again, a lot of people are freaked out for a lot of people are freaked out trading news. I tell you guys all the time, like when you're in your positions or when you even mark up your charts, you set your alert and then you execute your positions from there. But when you're approaching the market and when you're understanding like what's happening, when news happens, it literally pushes your trade just to your take profit faster. But there are times where literally the market, let's say, moves 300 pips in a day, right? That's when these super big events happen. So you can have a natural disaster, a geopolitical event, a war. So like, let's say a big oil disaster happened, right? That's of course going to literally shift the oil market tremendously in a one instant. Does that make sense? So there will be times like that, which I mean, stuff like that does not happen often, but there will be things like that, or like even I mean, even an election. Y'all saw when Biden got elected, y'all remember gold literally fell to hell. Like I'm talking about, I don't remember how many pips, but it was a lot. Basically, y'all know that we double everything. So I think it was equivalent to like 3,000, but y'all know that that structure moves differently anyway. So like 30 pips is, I mean, 300 pips is equivalent to like 30 pips on gold. You know what I'm saying? When we like look at it from like just going to the chart and measuring. Okay. Here, never marry a trade. So we do not control the market. We react to it. I put my main sayings on here. Okay. We don't control the market. We react to it. Very, very important. Trade what you see, not what you think. And then when I move, you move just like that. Okay. Y'all know, hey, DJ, bring that back. Okay. But those three things, beat them in your head. Like, and it's so important because when people are trading, people try to control the market. They say, oh, well, I thought this was going to do this, or I saw this doing this, or I thought this. It doesn't matter what you think. It matters what's actually happening. Like, even I remember when like some people used to put the stuff in the Facebook group, like sometimes when people will put trades and they'll be like, well, I thought this was going to happen and I thought this and I thought this. And I'm like, but what are the context clues that are right in front of your face that you're not even paying attention to? Like, even before you get in a trade, what are your confluences that you are literally just looking past just because you think this is going to happen, because you see this zone up here, but you are not even looking at the trend line that's before it, or you're not even looking at the fact that you're at a negative 61.8, or you're not even looking at the fact that you literally have divergence right in front of your face, but you just want to hold on to this trade just because you see this one thing. Okay. So make sure you guys look at everything, not just one thing, and make sure you guys are taking it step by step. Flexibility. Build flexibility into your plan so that you can pivot quickly in response to unexpected events. This might involve what I said when I first started, not looking too far into the future, as well as being open to adjusting your trade based on new information. So what I mean by that is there have been, even Sunday night calls, there have been plenty of times where I'll say, okay, guys, this is setting up for this, but make sure you have a break and retest of this structure before you just hop in this, because this also is here. So anytime we have something called scenarios where it's like price is at a particular area, but confirmations are not yet there. Price is pushing, but let's say a trend line breaks, right? We could see a structure, but once that trend line breaks, now we need to see, okay, this trend line just broke. So that means something. I'm not just going to now keep buying when I have a trend line break and retest for a sell with other confluences aligned. Okay. Makes sense. Anybody have questions so far?
Makes sense.
Okay.
Yeah, so far so good.
Liquidity management. Somebody just say something? All right, liquidity management. You want to make sure that you have enough money in your account. Basically, this is what this is. Do not over leverage at all. Maintain sufficient liquidity to cover expenses and take advantage of opportunities that may arise during periods of volatility. Do not over leverage. Do not over leverage. Do not over leverage. Do not over leverage. Okay. When you guys had the very last assignment, and then in your trading plan call on the course, I talked about using a starting out 0.30 on a $3,000 account. I understand that's not a lot. I understand that you're not going to have a drastic, beautiful growth of $3,000 and double your account in that week with that lot size, right? But what that does is allow you to get used to the markets and not over leverage. Meaning, most people, when they first start trading, they are very fear-based when those numbers start moving. And instead of seeing, okay, you have a $3,000 account and now your equity is, because you over leveraged, you went down to negative 2,500, then negative 2,200, and then now you're negative 2,000, and then you go down to 1,500 and you see half of your account in drawdown just because you decided to over leverage. So you have 1,500 in equity, and then you have 1,500 in drawdown, right? The reason that I say use that 0.30 is because even if you, let's say, fuck up completely on an entry, excuse my language, but let's say it's that bad that you just completely messed up your entry tremendously. Let's say you go not 1,000. Let's say you go 100 pips drawn out. Now, I personally believe if anybody goes 100 pips drawn down, you damn near, you lost the trade, okay? You lost the trade. But let's say, because in all honesty, as long as your structure is correct, if you hold that shit out, it's going to go back in profit. It's just a fact, right? Let's say you went, somebody say something.
I agree. I said,
Let's say you went 100 pips in drawdown before price went in your direction. That means your account only goes down $300. Does that make sense? So you're not freaking out. Like, your account went from 3,000 to 2,700 in equity. So you're not freaking out. You're not scared. You're not like, oh my God, having a heart attack in the market and literally scared to place a next trade because your account is just dwindling away. And also remember, and we talked about this when I showed you guys that compounding calculator a while back. As your account grows more and more, like, you're going to be scaling your lot sizes higher also. But I would much rather you use lower lot sizes in the beginning as you're perfecting your craft and perfecting your skill, right? Because then if you say, dang, okay, well, I see that my structure is correct. All right, my entry was freaking terrible, but okay, my structure is correct. So I'm gonna hold it out till it goes in profit. It might take a day or two, right? It might take even 3 days. But as long as your structure is correct, right, that trade is going to go back in profit. Like, there will be many times where somebody will be like, oh my God, the price went to shit. And then it literally turned right back around and did exactly what I wanted it to do. Like, come on, y'all. How many people have experienced this? Like, when you are disciplined trading, how many people have even experienced this? It's probably people who like have traded for a while, but how many people have just held on to a trade until it went all the way back in profit?
have.
Just learned
I
to do
did.
that.
I have.
For sure. Okay, so it's like,
happened.
and I'm also not condoning lost trades. So before anybody's on here like, oh my gosh, she's just telling us to, like, set it and forget it and let it just come back whenever it comes back. But the fact of reality is that if you do not over leverage, you do not have to lose that money. Even if you temporarily lost that trade and it went 100 pips in drawdown, if you do not over leverage, your account will go back in profit. It will go back positive and then just close it when it goes back positive. And even if it doesn't go completely there, like, let's say your structure was wrong, right? This is like a learning lesson. Let's say your structure was completely wrong. Take the fear out of it and look at the facts. The facts are, how does the market move? Impulse, correction, continuation. So let's say you had an impulse in the wrong direction. Even if you have an impulse in the wrong direction because your structure is wrong and you did not cross your T's and dot your I's before you got in that position, a pullback has to happen. A pullback has to happen before the continuation of that structure in that opposite direction. So get out when the price pulls back. Don't literally just take the L when price just ran away from you just because you're freaking out and like panicking and have anxiety, like, oh my God. Like,
But I have a question.
calm
Isn't
down.
that like, then what, like, you're pretty much saying like no stop loss then, right?
Yes.
Yes.
An example of why we
Yes,
don't.
I learned this
DJ
the hard
Red,
way.
come on, Malcolm, break this down real quick because I can't be the
100
teacher and
tips
tell
stop
people not
loss.
to use stop loss. So I feel
It's
like
like,
you know what I'm trying to say. So just explain what I'm trying to say real quick. Okay.
Let it breathe.
it's like the main, is there exactly like the main example, we don't use stop loss because it's always a bigger structure. So if you're trading on the 15-minute time, it just could be a pullback for the hour or the 4 hour, but it's always gonna give you some room to come back. You just gotta know.
No, I understand. I completely understand. What I was just saying is like, then you kind of pretty much saying like are you saying like are you giving us like for advanced traders then? Not for the new beginners, because you remember you was like, I'm not gonna tell you guys not to use a stop loss.
Yeah, I don't want to tell anybody not to use a stop
Have
loss.
a mental stop loss.
That is
Amaya,
not.
can I?
That
Yeah.
is
Like
not.
this.
Can I say
Put it
this?
like this, where you would put the stop loss, just put a notification. When it gets there, then you watch and see
That's
what's
all I
happening.
do.
Okay, that makes
Use
sense.
the alert on TradingView as a stop loss.
There you go.
Listen, it's not even funny because it's like I feel like I was honest with you guys and told y'all that I do not. Only because I do feel like brokers, like the spreads will literally stop you out. However, that is not the responsible thing to do when people just start out trading. Like a stop loss is key. But honestly, if you're not over leveraging and the problem is that most people don't have discipline. So you should use a stop loss because risk management is super important.
That's
Okay.
that's the thing that I'm saying is like the risk management part is like, okay, if I just let it go negative, right? And then but I have a certain amount of that I'm willing to risk for that particular trade, even though I know, yeah, it'll probably go back to the initial thing. Like in my head, what if I'm like, okay, what if it does push further though? Then I'm more in drawdown. And now my
Well,
risk management is messed up.
well,
I think
Jessica, no, I had a quick question.
did
Like,
it.
did you work your way up to like you had a stop loss in the beginning, and then
yes.
I guess like
over
after you did maybe
time.
40 or
So,
50 trades in a row,
yeah,
right? And it's like, damn, like I don't need a stop loss, and then it's like, bam.
yeah, but
Would you?
same, yes. So yes. However, at the same time, what she just said is true. Like your risk management, and this is a trading plan call. So your plan is important. Okay. Your plan is essential, is key, and is necessary. A trading plan is 100% key. And you protect your assets by using a stop loss. Okay. But this is the thing about I think novice traders compared to experienced, and then also undisciplined compared to disciplined. So oftentimes an undisciplined trader or a novice trader will set a stop loss way too close because they're fearful. Okay. And then every time they hop in a trade, it's like their stop loss is getting hit. So then their accounts are just dwindling away because just as much as you can compound an account with profits, you can compound losses also. So then that becomes very damaging to somebody's psychology that's just starting out when they keep placing these stop losses. And it's like, damn, it got hit. But that kind of goes back to what we talked about at the beginning of this trading plan call when I said you have to know your pairs also. Because if I understand that I'm trading GJ or GU or gold or something that's like volatile and can move a lot in any particular morning or London session or New York session or whatever. But then I also understand that those ranges are a little higher, then my parameters for how I trade that is going to be adjusted than me just placing, hey, I'm gonna place this 15-minute stop loss here. So that's why I also said when I was breaking down how to place your stop losses, you always have to place these stop losses based off of the structure that you entered on, not just the structure that you are looking at in totality. Does that make sense?
Yes, yeah.
Now,
Yes.
talked about today and what I'm talking about now in regards to, let's say you completely just go 100 pips and draw down or whatever the case may be. 9 times out of 10, that is because somebody's entry is wrong, but their structure is correct. So even if you use a stop loss and your structure is correct, right? 9 times out of 10, those stop losses are set based off of a major structure anyway. Does that make sense? Does that?
Yeah.
So, because that's why
All day.
I'm over with you guys setting stop losses based off of your entry time frames opposed to your overall structures. Because sometimes y'all have even asked on these calls where y'all ask about stop losses and y'all will say, well, that stop loss looks way too far to set. You know what I'm saying? Does that make sense?
Oh,
Is
absolutely.
everybody following
Absolutely.
with me?
Yes, I think when the stop loss is too far, it probably means you don't need to be in that trade.
Yeah, but did that provide clarity? Because I also don't want to confuse people and, you know, what's the Bible verse? It gotta come to me.
No, but that's great. That's the issue I've been dealing with. So thank you. I appreciate it.
No
I
problem.
also find, Jess, I also find like when you know where you are in the structure, whether you're on a supply or demand zone, you know that it's not gonna go, like even if you don't
At
set
that point.
yeah, the stop loss, it's not gonna go too far or too, if you're right in the middle, there's a chance that, it's better to use a stop loss. I've learned that the hard way.
Yeah, especially like when you're in consolidation, yes. Especially, yes. But the thing is that when you're looking at your structure, okay, like let's just go to a chart actually, because let's just make this make sense. So let's just even say, let's use share screen charts. Okay. So let's say we use this structure here, right? So let's say somebody was looking at gold. I know I have zones in here, but I know most people don't even have as many zones as me. So I'm gonna just use this analogy, right? So let's say somebody was in this for a buy, right? Somebody got in this for a buy, but then let's say they enter like right here, but they saw this buy happening. I'm gonna delete this zone for a second. They knew that this was going in a buy, but they just so happened to like enter here and price pulled back before it continued in that buy. Does that make sense? All I'm saying is that like if your structure is correct and you're literally in the means of like, I saw this, but I just entered terribly, you can hold your position until the full totality of that position plays out, or until you go back and hit break even. Does that make sense? All I'm saying is you don't have to compound a loss. Like you really don't, because in trading, if you do not over leverage, like you can really recover your account all the time.
So true.
Yeah, that's
That
crazy.
makes,
True.
that
That's
makes
I
a
very
ain't
lot of
know
true.
sense.
that. Yeah, I was compounding losses.
If you are, let's
Yeah.
just say you have an account and you have $3,000 and you say, okay, well, if I'm trading on GBP USD and it only moves 100 pips a day, is it safe to assume that and I don't set a stop loss, is it safe to assume that it won't go down past 500 if I'm using only $1?
What you mean won't go down past
Yes.
500?
So let's just say I'm trading only $1 lot size, right?
Yeah.
Yes.
On
Yes.
USD, on GBP USD, on average, it moves only 100 pips a day. So
Yeah.
let's just say it'll only go and draw down 100 pips a day. So is it safe to assume that if I don't use a stop loss, that it won't go down and I won't lose $500 or $400 or $300?
Yes, it's safe to say that. But you have to listen to what I'm also saying. As long as your structure is correct, and that's what I'm saying, it's not just taking a trade out of nowhere, right? Like I'm talking about on your trades where, let's say, like not when you get a trade wrong. I'm saying there'll be many times where people just have bad entries, but their trade was completely right.
Mhm.
You know what I'm saying? Like the times where people's trades are completely right, like you see your structure, you know your structure, you know your structure, you know where you are in the market. Like it's completely different than somebody literally taking a buy up here at the top of this resistance zone.
Mhm.
You know what I'm saying? And then you just like, oh, I'm gonna hold this, I'm gonna hold this. No, sis, like you lost that trade. Like, what are we doing? You know what I'm saying?
Mhm.
All I'm saying is on the trades where all of your I's are literally dotted and all your T's are crossed, right?
Mhm.
And you literally have confluences and everything, but your entry is just not the best entry that you could have taken. But you have all of these indications and factors like, okay, I know where price is going. Like you can hold that trade because you know where it's gonna go. Like some people will just keep compounding the L's, and it's just like, no, like your structure is there. You just have to work on your entries. So that's kind of where I was getting at the beginning of this when I was first going into this conversation.
Mhm.
Not just, I'm not saying to anybody, for the record, I'm not saying just place all your trades, don't use stop losses, set it and forget it and go on about your day. That's not what I'm saying at all. What I'm saying is do not over leverage your accounts. And if you use a minimal leverage or you use a minimal lot size that is compatible with your account, even if you go in excessive drawdown, your accounts will be able to recover as long as your structure is correct. You have you had the reasons as to why you got in a trade. If people do not have confluences and they're just hopping in trades just because they feel like, oh, I feel like this is going up, or I feel like this is going into a sell, and there are no confluences, no confirmations, nothing to literally add up to tell you the reason why you got in that trade and you just got in that trade. That's not what I'm talking about.
Or it could be any
Thank you.
random moment price just decides to retest the zone or trend line randomly.
You said what, Malcolm?
It could be any random moment that price decides to retest the zone or trend line just randomly.
Yeah.
Use.
Yeah. But does that make, I do want to make sure that makes sense. And I don't want to like, what is the Bible verse? A double-minded man is a two-edged sword or something like that.
No, a double-minded man is unstable in all his ways.
Oh, yeah. There we go. A double-minded man is unstable in all his ways. I ain't telling nobody to be unstable. And I'm definitely not double-minded saying, oh, don't use a stop loss, but use a stop loss. Like, that's not what I'm saying. I'm saying that there are rules for all of this, okay? And I'm just letting you guys know that if all hell breaks loose, the reason that we do not over leverage, and also if your structure is correct, you can sit in that position until it goes back positive so that you can mitigate so that you don't have to lose the trade. And thank you for that Bible verse, Terrence. Okay.
Okay. I just wanted to
No
say,
problem.
I understood that we are supposed to follow the rules. I just wanted to do that for my psychology because with the fear. So when that kind of helps add on to not being afraid.
Yeah. Because that's really what I'm trying to get at. Because I do think that a lot of people's psychology is damaged, and it doesn't have to be, because if you really just like stay calm in the market and you really just like are patient and just literally wait it out, like as long as your structure is correct, your trade's going to play out within at least 3 days. It's not like you have to stay in a trade for weeks.
Yeah.
Thank you so
I'm
much for
glad you're
saying that.
confirming this for us, Jess, because like I learned that the hard way, just from like comparing it to stocks. Like you don't sell stocks when it's down. Like, so I just learned that. But
Yeah.
this is you confirming that. But I think at the very beginning, it's probably better to set stop losses, like,
Yes. Yes.
because like fear gets in the way, and when you're like down by $1,000 or something, then you get out at the worst time because you're getting so scared that it's going to go lower and lower and lower and lower.
But that's why I gave the analogy of experience versus inexperience, but also wise versus unwise. Well, I said discipline versus undisciplined because, and the reason being is because nobody should go 1,000 pips in drawdown if their account is not at least $10,000 if you're
Yeah.
leveraging properly.
Mm.
Do you understand what I'm saying? Like if people are leveraging properly, their account shouldn't even be going that high. So if you have a $3,000 account and your account literally goes $250, you're not going to freak out and close the trade. You know what I'm saying? Like, or $300, you're not going to freak out. I mean, you're going to be like, damn, like I only got 2,700 equity, but you're not going to freak out like the same anxiety as somebody would have where I gave their account was 3,000 and now you're 100 or you're 1,500 in drawdown. Like that's 200, that's two different feelings. You know what I'm saying? And even with stop losses are also a skill, just like trading is a skill. You have to literally understand where you're placing them. I want everybody to go back to the call. I'll find it and put it in you guys' Facebook group where I literally broke down. Actually, I think it was on you guys. It was on a monthly call. It was on the first Monday of a month. It was on a course check-in call where I went over stop loss placement and understanding, like, if you're entering on minor structure, you're looking at your minor structure for your stop loss, not your major structure. We went over that, right, on a monthly call.
Yeah.
Yeah, I remember that.
Yeah.
Right. Well, yeah. Please make sure y'all go back and rewatch that and do y'all due diligence and make sure y'all like really understand it, because again, everything in trading is a skill set. But even what I'm saying in regards to the discipline and undisciplined, like nobody's telling anybody to just don't have a stop loss and let your trade go completely the opposite way.
Hey, Jess, when you said like your trade should play out in like 3 days, that's probably more so for like the higher time frames, right? 4 hour, 1 hour.
Well, it's not even a time frame. Like, I'm not talking about time frames. I'm just saying that, like, if your structure is correct, let's say you mark up your chart at the beginning of the week, your structure is correct, and you know where your trade is going. But let's say you just have a bad entry, like your full trade will play out before that week is over. So it will play out within a couple of days.
Copy that.
Yeah.
If it don't play out, do you like pull it, or do you just go by the pips?
Well, you want to look at structure first before you even make that decision, because if it don't play out, that means your structure was wrong. I'm talking about what I just showed. Like, remember, like that gold trade that I literally just showed, where there was literally a supply and demand zone, and it was literally a demand zone. We knew it had to go to the top of that supply zone, but let's say you had a bad entry and entered right before there was a pullback before the continuation of that trend. I'm not talking about just entering esoterically just in a space. You know what I'm saying?
Is it possible to have consolidation after breaking the retest?
What? Yes, for
That's
sure.
what I'm like. If it breaking retest and you high and you in it for like a week, do you just stay in it, like, or do you kind of like just pull it? Does that make sense?
I'm
making sense.
So you're basically asking me, are you asking?
I get impatient, like with consolidation. I start over guessing myself, like breaking retest, I'm in, but like sometimes when they reach consolidation, if it's more than like 3 days or 4 days, I'd be like, okay, like, am I wrong? Or
So do you mean a break and retest of like, because you know, sometimes you'll have a fake out and it's not an actual break and retest.
yes.
So if it's not an actual break and like there has to be multiple things to line up to tell you the reason why you got in the trade. So if you only see like, let's say you see, let's just find an example. Let's do that.
Am I making sense?
Huh?
Am I making sense?
I'm gonna find this example and then let's go into structure. Okay, so let's use this GU up here. We have this green trend line coming from the top. All right, so we got point A, point B, prices drawn into the future. Ignore everything else on this chart, but let's say somebody got in here or here, right? They could easily say, oh, price broke and retested here or here, right? Is that safe to say?
Yeah.
I wouldn't say
Well,
that's not enough. It didn't break enough. I
I
wouldn't.
wouldn't say that.
Well, let's drop it
Maybe
down
if
to
we look at a
time
lower
frame. But yeah,
time
let's
frame,
look at a lower time frame because some people would say this was safe. So let's say this, right? This is safe. This is a break and recess.
That would have got me. Yeah, that would have got
Copy
me.
that. That would have got me too.
Yeah.
But it shouldn't. And why shouldn't it? What
All
else?
the confluences didn't
More
set up.
confluences.
Exactly, no
yeah,
confluence.
go on.
Exactly.
And it's going
Exactly.
for breaking the retest.
Exactly. So remember, we're not just entering, even over here, we could use both of these also. Right?
That's a double top.
We have a zone. I probably would have took it to the zone.
But look though, it's a double top right here, but we don't know that because right here it could look like a break and retest. This is a super bullish candle right here. And then price came back down. So why would I not enter right here? Why would I not enter right here for a buy?
The only reason you would need to enter is if you don't have other confluences to
Several
match
things
that.
didn't set up.
Yeah.
It looked like it hit a 61.8 from the bottom to the top, and it hit a zone.
So listen, so just like y'all are calling it out to me right now, that's literally the same thing in your trades. Like when I'm saying like, okay, like, cause look, right here, right? We don't know that this is a double top yet. This literally looked like this could be breaking and retesting. We could have entered right here and then went straight into a buy and boom, right? So what's the reason that I just didn't enter into a buy right here? Like,
Not enough confluences.
my point. And also you have this big zone coming from the top, right? So that's my point when I'm saying you got to have multiple things. Like you can't just literally in trading, please y'all, like you cannot just look at one thing and that be the end all be all. Everything matters. So here we got this zone at the top. Like there were so many things that lined up. And like, even when we were, I mean, there are multiple times when I talk about like, I think even when we were when we were actually trading in all of this, when I was saying you want to wait on this, or you want to make sure this fully breaks or so forth and so on, like all of that stuff matters, right? But if you entered right here, right, and you entered for a buy, that's what I mean when I'm saying like, no, I wouldn't just tell you to get in this trade right here and don't put no stop loss and just let it run because your account will be gone. You know what I'm saying? The only time I'm saying that, like when I'm saying that, or when I'm saying what I'm saying is like, let's say this over here, this structure right here. Let's say you got in for a buy right here, right? And before this buy played out, we literally you didn't realize that price needed to come back and retest this zone, or you didn't know that price needed to come back and retest this trend line before it continued higher. So all I'm saying is that when you're in these structures like this, like let's say you took a buy right here, but you see your structure, right? And you already have your confirmations for your structure. right?
It's like when you say when you get into trading, like it's you in a little bit of drawdown, but you're like nothing was broken and the trade is still good. So you could just
Exactly. So like this would be a trade where I would say, okay, like let that come back. Like don't, like even if you had, let's say to C's point, I think it was C, or I don't remember who asked me the question when you said, so basically you're saying don't use the stop loss, because that is not, like I don't want to I want you guys to use proper risk management for sure. But there are times, and this will only come with the experience also, but there are times where you can literally look at this, like you can look at this and see like, okay, my zone is here. Like I've respected this supply zone all through here. I've pushed off. I've had bullish momentum off of this zone, and my price is going to my net zone. Now we can't foresee it going all the way up here until this purple zone is broken, but we at least know it's going to this purple zone. So if I enter through here or over here or whatever, and I just go and draw down before it gets there, right? Like I understand the structure that I'm in, so I can hold that position. Does that make sense?
Yes.
Yep. All right. Watch. Somebody gonna be like, oh my gosh, she telling me people don't use no stop loss. She is such a bad teacher. Anyways, here we go. So emotional discipline, we just talked about. Okay. And consistency. Wow, we just kind of talked about both of these things. So trading can evoke strong emotions such as fear and greed, which can lead to impulsive decision making. A trading plan helps mitigate these emotional biases by providing a structured framework for decision making. It allows you to stick to your predetermined strategy even when faced with uncertainty or volatility in the market. Okay. That's pretty straightforward. So we don't really need to go into it, but basically like stay calm, people, stay calm. Okay. Stay calm. Like just, but also, please don't trade before you're ready. That's the other thing. Finish the course and do the work, please. Do all the homework. I told people, I said this before, is that the problem with Forex and why Forex has such a bad rep is that it's the market with the least barriers of entry, meaning that you can come in with the least amount of money and anybody can come into this market and just place trades, and they play it like it's a video game, opposed to really learning the skill set. And like I've said this before too, like if somebody's a doctor, they don't just go to medical school on day one and then walk into a hospital and start performing surgery the second day. Like they have to go through so much training. They have to go through all of these different science classes, anatomy, like all of these different things. And then you have to do residency where you're shadowing doctors and stuff like that. And then you have to put this stuff into application before you actually perform surgery on your own. This is how trading is. It's like you guys already have a shortcut because you have me to give you guys everything that so that you don't have to learn the hard way, right? Like you don't have to learn the hard way at all. So just follow it step by step, because taking the course and just playing through the videos and not actually doing the work is never going to get you anywhere. Not doing the homework until you understand it is just going to make you frustrated and think that Forex is a scam. And it's not. Like Forex literally changed my whole freaking life. It's like the best thing in the world. Like, I don't know what I would do without it. And I just thank God that God blessed me with it, because I feel like Legend never even has to work a job if he doesn't want to. Like, I feel like if you just learn this skill set, like you literally are free forever and nobody could ever take it from you unless they kill you.
And they still can't get it.
Yeah, that was very aggressive to say, but I'm just saying that nobody could ever take this from you. Like never.
Right.
Like you have this until the day you die, unless you get dementia or something. But you have it forever. So learn it. And then also be patient with your journey, man, because it's really not a sprint. Like, please do not go mute people on Instagram. Like, that is one of the main reasons that I don't post trading on social media, because it's just people are so, number one, like, look at me, look what I have. Da, 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 da. Look how much money I made today. Da, 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 da. And it's just like, everybody has their own journey. Don't be mad because you didn't make $1 million yesterday. Like, we all know you can make a lot of money in trading, right? We know that. But take it step by step, and give yourself credit. Like, if you went through the whole week with no losses, even if it wasn't a big lot size, be grateful that you saw the market enough to be able to go through the week with no losses. Because you doing that consistency, you doing that consistently is what's going to, one, boost your confidence, but then get you to the point where now you're able to scale your account. And then just build it brick by brick. Build your account step by step. Like, do not just get super greedy and say, oh, this person made $10,000 this day, so I want to make $10,000 this day. Like, take it step by step. You know?
Yes, ma'am.
Yes, ma'am.
And also
Brick by brick.
understand that taking it step by step and being patient with your journey will set you way far in advance than the person that's impatient with their journey and taking breaks. I know traders that have traded for 8 years that are still unprofitable as hell. Just because you've traded a long time does not mean that you've been consistent a long time. Because some people,
I know them too.
I'm in the market right now, and then I don't touch it again for 3 months. And then I don't touch it again for 5 months. And then I'm dibbling and dabbling, and oh, life's taking over and this and that. Please understand also that I understand that people are going to go through things in their life, right? Like, we've talked about this. You cannot control life, and life is very unfortunate sometimes, but God did not wake you up the mornings that he wakes you up for you not to keep pushing forward, because you still have breath in your body and the ability to literally progress and make something of each new day that comes into your life and comes into, like, each new day is a new opportunity, right? So when you deal with certain things or whatever the case may be, it's just like, okay, yeah, shit's gonna happen. It's inevitable. Shit happens all the time. Like, I can literally name a whole list of shit that is even happening in my life right now. But am I going to complain about it? No, absolutely not. Right. And I'm damn sure not going to step away from the charts, but even in your learning journeys, right? Like, even when I told y'all when I was pregnant with Legend, I didn't trade all the time. And I only traded the trades that were super clear as day, but I was still on my chart, constantly looking at the charts because my mind needed to stay in structure. Does that make sense?
Yes, ma'am.
Yes, ma'am.
Absolutely.
Yep.
Yes.
Consistency is key to a long-term success in trading. A trading plan provides a set of rules and guidelines to help you maintain consistency in your approach. This consistency can help you build confidence and improve your overall performance. All right, so we got 5 minutes till class is over, but we're going to go over it tonight because we need to get through this, okay? So, record keeping. Maintain a trading journal to track trades, outcomes, and lessons learned. So, your trading journal, how should it be? Okay. You want to maintain a trading journal where you record every trade you make. It includes details such as the currency pair traded, entry and exit points, trade size, direction, long or short, stop loss, take profit levels, reason for entering the trade, and any notes or observations. This journal helps you review your trades, identify patterns, and learn from both successful and unsuccessful trades. So I showed you guys in the last week of the course. What's the last week? You guys had, no, not the last week. The last 4 weeks of the course of how you do your course, where you literally do your analysis, that is how I keep my trading journal. I screenshot each one at the end of the week. I'm sorry, I screenshot it. Well, it basically is the end of the week. When the market closes, I screenshot my analysis as well as my bars pattern. Then at the end of the following week, you look to see did that play out or not. That's what builds your confidence. Now, that's how I keep mine. But I put right here that you want to identify how you process information, because that's also important in how you do your trading journal. Do you prefer analytical or artistic expression? How do you prefer to take notes? I'm not the type of person that can just put, I'm not the type of person that can just write in a trading book and put, oh, GBP USD 1.26485 exit, and then like I don't learn like that. Like I'm not gonna, like that's not gonna help me just writing it in a book. So I prefer to just have it visually where I could see, oh, that trade, boom, perfect. Win, bam, bam, bam. Okay, great. Does that make sense?
Yes. Yes.
Okay. But the trading journals are important because that's what builds your confidence over time. Identify how you process. Oh, I already said that one. Sorry. Hold on. Account statements. So most Forex trading platforms provide transaction history and account statements. So you can literally look through your trades. Anytime you have losses back to back, like I tell people all the time, you should not get in no new trade before you understand why you lost the previous trade. Ever. Like nobody should lose a trade and be like, damn, I lost that trade. All right, what's the next one I'm looking at? Hell no. Ever. Okay. Regularly download and review these reports to cross-reference with your trade journal to ensure your accuracy. So this is important after you've mastered top-down analysis and stuff like that. Like when you're actually in your charts and you're actually placing trades in your accounts, I need you guys to like literally look through, okay, these are all the trades like I've won. Okay, great. What did I lose? And if I lost any, like go over them, please, because that is how you learn. What did you not see? And the reason I say it like that is because the market's always going to be right. So 9 times out of 10, if we lost a trade, it wasn't something that the market did. It's we at some point lacked something. We didn't see something. We weren't aware of something. We did not dot our I's and cross our T's. Performance analysis. Use your trading records to analyze your performance over time. Calculate key performance metrics such as win rate, average gain loss, risk to reward ratio, and overall profitability. This analysis helps you identify strengths and weaknesses in your trading strategy and make adjustments accordingly. So basically, I just explained this before I even got to this slide. So basically everything that I say, you should not enter another trade without understanding why, so forth and so on. By maintaining accurate and detailed records of your Forex trading activity, you can track your progress, evaluate your performance, and make more informed decisions in the future. So I put right here, because I do this, keep backup copies of your trading records in secure locations such as iCloud storage or external hard drive. Organize your records systematically to facilitate easy retrieval and reference when needed. I literally have all of mine on a hard drive. I think did I show you guys in that video on the very last, on the trading play call, the very last video in y'all's course? No, did I?
I feel like you did.
I feel like I did too. But that's the reason I say that, everybody, like, you don't have to keep it, but I literally have all the trades like that I've analyzed since I started trading. And a few years from now, like, you're gonna look back at that and be like, dang, like, that's crazy. Like, you know what I'm saying? And just looking at your progress and stuff, it's like so beautiful. And then before you guys know it, you're gonna be like the GOAT. And then it's gonna be like watching a kid at a family reunion. Like every year, you're gonna look back and be like, damn, what's that person? Like, wow. You know, like I feel like kids like show you how you age. Like you see a kid and they're like super small. And then the next time you see them, they're like a completely different kid. That's how keeping a trading journal and then seeing your growth, that's how it is. Okay. So I'm happy we were able to finally finish that trading plan call. Yes. Okay. Next week, we are back on our charts. All right.
Can you tell me the name of that video you told us to go back and watch again, please?
It's in you guys. It's not a name because it's not on Facebook. It's in you guys monthly calls on you. I mean, I'm sorry. It's not on YouTube. It's in you guys monthly calls in your Facebook group. So I would have to go back and see what month it was.
Can you upload PowerPoint to the Facebook?
Yeah, I will. Now that we're done, I will.
Thanks.
Of course. Of course. Listen, I love you guys. I'm so happy we were able to finish today. Okay.
Thank you, Jess.
No problem. No problem.
Thank you.
And listen,
Thank you,
for
Jess.
my
Appreciate
people
you.
that's trading this week, I hope y'all have a wonderful, profitable week. Okay.
Oh
For
yeah.
my people that's not trading yet, remember the journey is the journey, and just go through and just follow the journey. It's okay if you're not trading yet. I would much rather you get your psychology and everything down pat before you actually place the numbers. Okay.
Just don't quit.
Just don't quit at all. And then for my people that's been doing this for a while, I need y'all to up y'all lot sizes because I need my next 100,000 student, okay, so that I can have my next millionaire student. Okay, so go ahead. Go just go ahead and pop that out real quick. All right, y'all.
All right.
Bye.
Bye, Jess. Thank you.
Appreciate it.
Thank you, Jess.
Bye.
Bye. Thank you, Jess.